Hi everyone. Thank you for taking your time out from your busy schedule. We at AltPort Experts, we are thrilled to announce our brand new show, which is Ask the Expert Show. Through webinars, we aim to share insights into diverse asset classes and forecasting knowledge against our investor community. So my name is Devanshu Vinlish, and I am the Vice President for AltPort Experts. With me, I have a speaker, Abhishek Jaiswal ji, who is the Fund Manager and Chief Investment Officer of Finavenue Growth Fund. Let me take a moment and introduce Mr. Abhishek. So Mr. Abhishek Jaiswal is a Fund Manager and CIO, which is Chief Investment Officer at Finavenue Growth Fund, bringing over 7 years of experience in the financial markets. He specializes in identifying high growth opportunities in micro and small cap segment through a disciplined, research driven investment approach. At the core of his investment philosophy is a proprietary framework that combines quantitative model, market metric studies, in depth fundamental research, and extensive on ground due diligence to cover business with a sustainable competitive advantages and a long term wealth creation potential. His investment process emphasizes management quality, scalable business models, capital allocation, and valuation discipline, of course. So, welcome Abhishek ji on our platform. How are you?
Thank you. Thank you so much, Devanshu. Everything is good. How are you?
Yeah, doing well. So, Abhishek ji, if you can take us through what you have got it for us and for our audience, that would be a great help, and then we will have our interactive sessions going on.
I believe, Devanshu, since we have already done it once, in the earlier year,
Yeah,
this time I would want to make this more interactive.
yeah,
Well, I believe Finavenue is a known brand to everyone. It's a Category 3 AIF whereby we specialize in investing into the micro space, companies ranging from 2,000 crores to bottom side of 200 crores market cap. This is our space where Finavenue has time and again found opportunities where companies have grown proportionately in size over the year.
right.
This time as well, I'll be open to every piece of questions that the audience has to ask me today, and I'll be open to every round of questions that you yourself, Devanshu, would want to put for me.
Yeah,
And Finavenue currently invests across three buckets. Just for a brief touch to all of the audience over here, we put 20% of our capital in the unlisted market, whereby we believe that the companies can go public in 15 to 18 months time frame. Also, 35% weightage of Finavenue's portfolio goes into the microspace universe, whereby the average market cap holding is around 500 odd crores or at max 700 odd crores. And then we also have a 40% weightage in selective companies, whereby the market cap ranges from 7,000 crores to as high as 18,000 crores. At least that is our entry space. And then over time, the company can become bigger in size. Right now, the Finavenue holds approximately 62 companies, which spans across 16 sectors, whereby the top 15, 16 companies of the portfolio collectively holds 40% of our investments. And then we have a diversified bucket. The reason that Finavenue has a diversified approach post top 15, 16 companies is at the end of the day, they are all micro and small companies. So sometimes they can miss earnings, and then volatility can run through anything, as many of investors would know. So we would always want to secure every cent of money that we would deploy in any company. And at the point when all the negatives are already priced in, we would want to have a maximum allocation. So based on all the metrics and the quants that we follow at the fund level, Finavenue has been able to always increase allocation in ideas that have worked well, decrease allocation in ideas ahead of time, when they are about to, make an error on the earning side. And that is how we have delivered a good 30% post-tax, post-fee CAGR return since inception period. So that is a quick brush up on the Finavenue. I'll be open to any question that you might have to put,
Yeah,
Devanshu.
so before we start, so now SEBI has changed some guidelines for micro caps. So what are your thoughts on that? Previously also it happened when SEBI did the categorization and everybody
Mhm.
sold, all the FII basically sold the small caps and there was a big hit. What do you think
Mhm.
about now, investing in micro caps because SEBI has done the changes? So can you throw some lights on that?
So the SEBI has a very beautiful categorization for, the micro caps, the small caps, and it's important because the institutional investments or the institutionalization of investing in our country is growing every day. You see, 2 years or 3 years ago, there were very few AIFs, and in last 1 year, more than 250 AIFs has been registered in India alone, domestic funds. I'm not even taking a factor of the foreign funds that are getting registered in India. So it's very important that SEBI demarcates the micro as well as the small cap category, because at the end of the day, every institution would put it in their PPM, and then the investment that they do would be guided by that philosophy only. So uh, as long as we are able to identify our core areas of research, I think it's a no issue at all. And for every company that is growing time and again, I believe it will find investors at every level. So maybe a niche AIF or a sectoral AIF will buy a super small company, then a diversified risk oriented AIF can buy that same company at a higher market cap again.
So, did you see any changes? Why did you face any problems while deploying the funds because a liquidity crunch might occur because of this? So, what do you think about that?
So as of now, the space where we operate, I have not found any trouble for deployment of the capital against the AUM that we operate and the internal risk matrix of at least less allocation of 7%. We are not facing any trouble. And the typical company where we also put our money are in the range of 300 crores and above. So at least we are not facing any difficulty in our AIFs.
Okay, perfect. So, I think you participate into Anchor and QIB books as well,
Right,
if I'm not
right,
wrong.
right,
So, how
right.
do you see those markets coming in future?
So I believe that, see, at the end of the day, the whole point of creating an anchor position and QIB position in these small company is to build an institutional trust so that the retailers can focus behind these institution and accordingly take their decision. So if
Mm,
we remove that from the equation, the trust element will be out of the window.
okay.
So in a way, as more and more companies will come into the market, the anchor and QIB is set to have a major growth on the upside only.
Because the markets were so bad, Abhishek ji. So people are losing trust on these kind of investments. So what is your say to them now? Because the markets are clearly giving a positive
I
indicator. So
I understand. I understand. See, Divanshu, when it comes to the small and micro markets, they are in a way an outcome of liquidity and narrative, both. Okay. Earlier in 2023 cycle, narrative and liquidity both were in your favor. You saw the blazing run. Right now, narrative is getting in your favor. Liquidity might not be, because still the interest rate are either on holding side or somewhere there on, at least on the 25 bips up or down. If you see 2 or 3 quarters of a downside in interest rate, or at least the commentary, you would see liquidity also being very strong in the system. Financially good for the small cap companies or the micro companies, because that's their bread and butter, the working capital. And in a way, the financial market will reflect it again. So as of now, I believe narrative is in your favor, so we are doing well. Once you get liquidity in your favor, at least two rate cuts from here, I think the markets can be in a full bull mode again.
okay. So what are your thoughts looking at the crude now? Because the crude has corrected now big time. How it was going above, in the previous market zones when we,
Mm-hmm, mm-hmm,
at the
mm-hmm,
time of war. What
mm-hmm.
do you think about that? And what do you think? What can be the hit on our markets, or maybe what can good happen for our markets because of crude?
I would really put it in a very nice narrative that there was a very large tennis turf where all those tankers were tennis ball, and there was one side Iran and other side was US, and they were all playing with those tankers. So every day the crude volatility was at its peak. Luckily for our country, we were still able to manage our resources nice. And at least for 2 months period, based on all the channel checks that we did, there was definitely a difficult time. So in the June numbers, we will see certain hits on the margins for few companies, which are, indirectly heavily influenced by the pricing of crude. Typical, the whole of polymer industry or the base machine industry will have the maximum impact of the crude. As far as for the portfolio is constructed in the Finavenue's ecosystem, maybe less than 10% of our business are directly impacted by crude. So when it comes to Finavenue, I don't see any trouble with crude, but for the larger economy, definitely there will be a little pressure. But again, with the 40% correction from the peak, the market has already discounted in the March fall. I think we are already past the reset.
Yeah. How do you see, upcoming markets when it comes to micro cap investment and or you can say SME investments? Why people should invest in these kind of you know vehicles?
So that's an interesting question because when it comes to SME investment, people should look at this space because the start base of these companies is very small. From a base profit of maybe 15 crores up sub 20 crores profitability, whereby the turnover could be in the range of 200 crores. These companies, if they accelerate nicely in the coming few years, and if they are in a good tailwind sector, then you can ride for a very, very, very higher upside return. A company which is in the cable and wires, and in a way, it's a proxy to the larger national grid policy or the T&D ecosystem. You're very sure that the TAM is going to explode there because of the larger governmental policies and the renewable theme and the intergrid connectivity. If you put up a good position in these small cabling company, given that the promoter checks are good, I think you are bound to make a serious capital money over there. So people should always come to SME space with a larger sectoral check in their mind, and then a proper balance sheet check as a second factor. I believe it offers you a very serious alpha on the upside against the larger market. So at least 20-25% of your net worth, if you are an aggressive investor, should definitely flow into this space. Given if you're a conservative investor, maybe sub 15% could be the exposure.
You are absolutely right, but from last 2 years of experience, investors are little of fearful while coming into this kind of asset class. So,
Mhm.
what would be your say to them? Now because you are saying that the markets are settled and it is looking good to invest in. So, what would be your say to them that why they should invest in this kind of asset classes?
So the micro and the small, small cap sector, this is a literally 3-year cycle period. I mean, to judge it in a 1-year performance would be, a little, what do you call, underselling it. So you should always have that measurement on your side that when you're putting money into any company, have that horizon of 2 years or 3 years plus. If your valuations are right and if your company is into good sector, you don't have to worry about any single year of underperformance. It will over deliver in a single year. We have seen many cases whereby in 8 months, the stock is simply 40% up and it has not done anything in the last 1 year. So it's a matter of patience as well as understanding.
Perfect. Now let's come to your portfolio and understand a little bit about your portfolio as well.
Mhm, mhm,
So,
mhm.
may I know what would be your beta of your portfolio?
So, Divanshu, when it comes to the alpha, beta, or Sortino ratios,
Yeah.
the AIF that we operate, whereby there is a 50% or higher churning ratios, I believe the beta could, look little disproportionate to a
Yeah.
typical mutual fund investor reader. So, apart from portfolio ratios, if you have any questions, I can take it up very well.
Okay. So, what is the peg ratio of your portfolio?
So, when it comes to PEG ratio, it's around zero point 0.6 that you can say with a good confidence.
Okay.
Yeah, it's always under one because all of our companies are growing by more than 25% on the bottom line, at least. And given the weightage that we have given to them and against the valuation that they're trading, the PEG is always under one.
Perfect. So, if somebody invests in your fund for long, let's say for a horizon of 5 years, or maybe 4 years, so what should be his genuine expectation or her genuine expectation?
So I believe beating the benchmark by a good 500 or 600 bips is a very honest expectation that an investor should have.
Okay, makes sense. And why do you feel so that you can how how much confident you are to generate these kind of returns for the investor? That's one thing which I would like to ask.
So my confidence is behind my risk allocation and the sectors that I have put money in.
Yeah.
If the macros and economy are in good shape, I
Hmm.
think my confidence is very, very, less required in that side. I don't even have to speak about the company. It will deliver.
So, if I may know, what kind of themes you choose while investing in your fund, if you can give some brief idea on that, that would be a great help.
So currently, if you talk about the themes where Finavenue has an allocation to, so pharma, healthcare, and medtech is a very important theme because with the Biosecure Act put in place, the world CDMO supply chain has to shift from China to India. That's your play number one. With a right amount of PLI put in the medtech and healthcare sector and all the aggressive capex happening in the hospital sector of our country, the medtech companies, as well as the diagnostic machining companies in our country are set to grow. So Finavenue has got 16% of our portfolio, put in there. Then I'm very, very bullish on the capital theme as well as the infra theme as well as the power theme because the government has given a capex of 11.1 lakh crores again. Then there's a 9 lakh crores of intergrid connective policy. So all the power distribution companies, when it comes to EPC, power machine manufacturing companies, T&D companies, again has a 10 to 15% allocation in the Finavenue's portfolio. Then there is a specialty chemical company in the Finavenue's portfolio whereby we have a 7% allocation. Uh, Mining as well as metal, again, we have exposure of 7 to 8%. And then the data center AI, the proxy theme comes to optical fiber cables. So we have a 10.5% allocation to that sector as well. So, across these four or five sectors, the 50% of the portfolio is done and dusted. Then another 35% sector where Finavenue has put money, it's all bottoms up. So you see, tailwinds might not be that strong, but the bottom line growth of our business is super solid. Okay, so let's say the infrastructure sector in our company or in the country, let's say it's growing by maybe 5 or 6%. But one company that we have in that sector, it's like a proxy or a supplier to the larger infra players. That company's bottom line is growing by 45%. So it's a bottom up play.
Hmm. No, makes sense because somebody investing into this kind of AIF should expect that these kind of only companies can give you those kind of returns when you invest.
Absolutely, absolutely. So we take a very precarious call when it comes to liquidity and valuations. So we want to put Finavenue on a very balanced scale. That yes, we are looking for an aggressive growth, but no, we are not going to compromise with liquidity.
Oh, perfect, perfect, perfect. I understand. So you're right. Now, what do you feel, because you're managing money from a long time? So, how do you feel the volatility part? How do you manage those volatility part? Because earlier the volatility was not so much, but nowadays, if you look at volatility is very, very high. So, how do you manage those volatility part? If you can throw some lights there.
So I think it's like an opportunity for us. So if you understand the volatility with a perspective of valuation, I think you can convert it into an opportunity. If you don't understand valuation, then volatility can, really play or mess up your mind. I mean, you are bound to exit at the bottom or buy at the top. But if you really put valuation layer on that volatility, it's no trouble at all. You can make your allocations. You know that this is the actual movement that the stock can deliver in the coming 6 months or 1 year. If at all it happens, let me just take up the opportunity to allocate more capital behind it.
Makes sense. As you know, day by day things are growing, and people are aggressively investing into these kind of funds.
Mhm.
What would be your suggestion, that what they should look at while investing in these kind of funds?
I'm sorry, can you repeat your question, Devanshu?
So you know that now a lot of people and a lot of investors are investing in these kind of funds. So what do you
Mm-hmm.
think? What they should look at in these kind of funds before investing into?
So definitely one should look at the complete portfolio and the allocation. Now, whereby the fund is holding the larger concentration, what is the upside in those select companies? If at all an exit has to be made, then how that exit will come? That should be the next question. And then, of course, the thesis of the IM is very important. That how do you see different sectors playing out in the future, and how well are you yourself exposed to those sectors?
Perfect, perfect.
And based on your return expectation, the portfolio AUM is also very important. I mean, to expect a 3,000 crore fund to deliver 50% return, I believe it's a little disfigured mind. To deliver 10% on a 30,000 crores capital is something very, very appreciable. And to expect a higher AUM of, let's say, or a higher return of 30% or more on a 300 crore fund is something very reasonable if you're rightly placed with the valuation and concentration.
Makes sense. So, how do you see, right now in these kind of funds, or maybe in these kind of not funds, but in these kind of
Mhm.
companies where you invest, sometimes they are very overvalued. So, how do you conquer that, and how do you say that this company is overvalued? Let's not, invest
So
in this. So, when do you
the
conclude
the
basically that?
the understanding of undervaluation or overvaluation is not just derived by looking at the business that is in front of you. You have to look at in comparison to the whole peer market, both in the listed and the unlisted space, the vision of the promoter who is running the show. Because if they are able to do it at this size, if they have the capability to do it at a later size or larger size as well, I have to give them that premium again. Okay. The entry barrier behind replication of a business is also important. That also comes in the valuation. So the market can typically use a DCF, but the true value of DCF comes only after 7 years of investment, when the company has really generated those profits. But the actual valuation that we do in our market or at our size is your replacement sizes, or the revenue multiples that we would like to play.
But as you know, there are lot of upcoming industries which are coming into the play.
Mhm.
So how do you look at them? Because they don't have unlisted stocks, that they are not even listed. But there is a very very big uh, opportunity which is coming now. So how do you look at those valuations, and how do you conclude those? If I may understand.
So, I mean, it will prove its worth over time. So, if you found a business in the unlisted space, which is super niche and it's commanding a little premium valuation,
Yeah.
and you are fully convinced that yes, the revenue and the profitability that today that is in front of me can exponentially grow over time,
Yeah.
then it deserves that valuation. I mean, the kind of valuation that US companies, the Anthropic or these guys are commanding, I mean, even at such higher billion-dollar valuation, when it comes to their IPO, when it comes to their next round of funding, they are again making a multi-bagger return. I mean, to make a multi-bagger return on a billion-dollar valuation is something that is absolutely crazy for my understanding.
Yeah. That's what it is.
So you have to know that when something is going to become big, you will have that feeling. वो समझ में
Yeah.
आ जाएगा आपको.
वो है, बट तब तक समय निकल जाता है ना अभिषेक जी, इन्वेस्ट करने का
So
तो।
Devanshu, that is why there are premier institutions, the fund houses, whereby you take learning from them.
Hmm.
I mean, as a human, you should always have that mindset to learn from whatever sources you can. So
Yeah.
speak with different fund managers, speak with senior analysts, speak with seasoned expert players. Always ask what they are reading, why they are reading, what they are thinking, how they are thinking, what it can become, where it can go actually wrong, what are the tailwinds, and just superimpose everything. And at the age where we are right now, there is a master AI right in your palm.
Yeah.
So whatever
Gaming
I am
industry is also
saying,
moving too much nowadays. Gaming is also coming like anything. If you look,
absolutely.
yeah. So have you thought of taking any exposure in those kind of stocks or maybe companies?
Right now, and the typical framework that we follow, if the company cannot go public in 15 or 18 months time frame,
Hmm.
that's not our forte
Okay.
to put money into.
Okay. Yeah, because
Even if it's
now,
doing good, it's outside our purview. Yeah, we
okay.
have a open-ended fund. We have a responsibility to our
Yeah,
investors to
yeah,
give
yeah,
back their money if they want.
yeah. So, do you do any coin? Do you offer co-investment opportunities also from your
I-
fund?
In a way, yes.
So, if you can throw some lights that how do you do that, that would be a great help.
So any time whereby, we would come across a transaction whereby a certain size has to be committed.
Yeah.
So Finavenue would commit the whole round, and then we will take a largest exposure from our fund to
Hmm.
showcase the confidence of a lead investor, and the
Yeah.
rest of the amount can be through our LPs.
Oh, lovely, lovely.
Yeah.
Which mean to say, if somebody wants to buy a opportunity, they can take it via
Absolutely.
you, and
Absolutely.
you get
Absolutely.
the deal happen through that. Oh, lovely.
Absolutely.
That's
Absolutely. I mean,
uh,
we'll be responsible. I mean, it's not just about taking your money and, putting it in the primary source of the company. It's
yeah.
about offering you an exit in due time as well.
Okay. So, do you even inform the investor, after selling that, now we are doing the exit from this company. So, if you wish to,
Absolutely.
okay,
Absolutely. Absolutely.
that's something which is fruitful, and investors can make money with Finavenue.
Absolutely. And it's always written in the SHA format. So
Okay.
all those discussions of taking entry, raising exposure, or making an exit, there is a clauses for everything in there.
Okay. Okay. Perfect. Perfect. So, you are managing this fund. So, what was your peak basically? How much was the peak of your fund? If you can throw some lights on that.
I'm sorry, when you say peak, I'm not understanding
So,
what you're saying.
the peak of the performance, usually we look at some funds, they have gone to 50% of, growing the fund value when the markets were trading all time high. So, if I
Mhm.
may know, what was your peak of your fund, so that would be a great help.
So we were at peak, we are at peak now.
Okay.
I mean, so any drawdown that would have happened in the period of March since last September,
Yeah.
we have captured every cent of the downside.
Okay. And if somebody would have invested in your fund, what would have been the maximum drawdown a investor would have seen?
16%.
How much? 16%.
16%, yeah,
Oh,
16%.
fine.
That is the maximum
Because
drawdown that they have gotten.
yeah, yeah, that's
Yeah.
fine
It's
because
very, very, very logical to have it in the
yeah,
microspace.
yeah, because it's a
Very
micro
important
cap.
whether you can capture it or not on the
Yeah,
upside.
because I think indexes were also down to the same tune. If we look
They
at
were more. I mean, 85% of the micro cap universe was down more than 40%.
yeah.
More than 40%.
So, which mean to say that we are investing safe in Finavenue, comparing to the benchmark. Because if we look at benchmark, then benchmark is was more negative. I remember,
Absolutely.
when I looked at the
Absolutely.
fund performance. So that's why I
Absolutely.
asked to
Mm, mm,
you and
mm.
clear to my audience that it's a safest fund to invest in. So, do you do any kind of short as well? Do you hedge the position also, or it is a pure
No, no,
open-ended,
it's a pure long
long
only
only?
fund. We don't take leverage position in any sort of format.
Makes sense. Makes
Yeah.
sense.
So it's only the natural hedge that we can build is taking time profits with the valuation put in mind or having the right amount of cash allocation.
So one of our client is asking how to track investment sector wise, performance wise, and anytime the annual report is released for the latest update
With Finavenue or with any other companies.
with Finavenue.
So our fact sheet every month that we dole out to our investors, you can call for the fact sheet of the past 12 months. You will get the sectoral breakup, return distribution over time, and the newsletters are always there.
Makes sense.
Yeah. You can ask for 12 months fact sheet.
So
Every month we
anything
can share it.
you would like to highlight to our investor community? Why someone should enter your fund and make it part of their portfolio.
No, I'll not say why should someone into our fund, but I would definitely say that everyone should have an exposure to the SME space because of the reasons that I earlier stated, the low base that it offers, the right amount of access, and the early promoters that you can track. Of course, there is a risk that there is not much of a history involved over there, But that is why if there's a nice anchor institution behind a particular business or a promoter, you can trust that institution and maybe invest along with it. So I can openly say to my audience over here that take a look at all the companies where Finavenue has done an anchor investment, and take a look at the hit ratios. So even if you have taken a direct exposure alongside Finavenue over time, I'm not endorsing any stock, but
Yeah,
it might have been a super fruitful for you as well, barring the volatility. I mean, leave aside the ups and downs. Over the period of all the cycle in the past 2 years, I believe people would have definitely made money.
makes sense. Makes sense. So thank you, Abhishek ji, for giving your time, valuable
Thank you so
time
much
to us.
for
Thank you,
having me over
investors
here.
who came and joined our call. If you have more queries, you can reach us at www.altportfunds.com, or you can email us at samir@altportfunds.com. So thank you. Have a lovely day ahead. Thank you,
Thank
Abhishek ji.
you. Thank you,
Thank you.
Divanshu. Thank you, everyone, for joining. Good day. Good day.
Thank you.